Hello and good morning. You tuned into Market Cafe. I'm Ankita Saxena, and the next half an hour I'll take you through all of the transpired on the global front, the geopolitics, and of course how the markets are moving and what's going to be the impact on the Indian markets and the cues you need to watch out for before the start of T Street. So let's get started with how the Wall Street shaped up yesterday. Well, it was, a good day as far as Wall Street is concerned, because remember we had a softer than expected US CPI numbers, and that really helped with the lifting the sentiments as far as inflation concerns are concerned, and of course the Fed keeping the rate steady, and on account of that there was optimism and strong earnings. Remember, from the major financial firms have reassured investors that the earnings growth remains intact despite easing inflation, while the treasury yields also, a lower treasury yield also boosted demand for growth stocks, specifically particularly the mega cap technology companies. And on account of that, we had Dow Jones that was trading up 150 points, Nasdaq was trading up more than 0.5%, and S&P 500 also inched up 0.3% in the trading session on account of that. Now remember, today we are also waiting for retail sales and labor data that is also very important in deciding whether to hold the rates steady or not, because inflation and labor market concerns are the two big concerns that Fed was faced with. Let's talk about the oil prices. Now, oil remains rather elevated. Brent is still sitting at $85.46 per barrel, more than 0.5% uptick coming in right now. We also see WTI that has climbed $80.23 as of now, 0.8% uptick coming in on WTI also, on account of fears of a wider conflict with Iran. So that's where crude is at. Crude remains elevated as of now. But let's also talk about the Asian handover and what that looks like. Asian markets have started out mixed. We have Nikkei that's trading down almost 3% there. We have Shanghai that is also down 0.8%. We have Hang Seng, that's the only one that is trading in the green with the gains of 1.5%. S&P ASX 200 is very, very flat right now, albeit in the red with cuts of 20 odd points. And the implied start to Nifty is also indicating a very, very muted, lukewarm start to the Indian markets with cuts of just 6 odd points. So a very flat, muted start is what we're expecting for the Indian markets. But let's talk about the geopolitics. The US is stepping up military pressure on Iran, even as President Donald Trump says that Tehran wants to return to the negotiating table. Fresh strikes have targeted Iran in air defenses, missile sites, and maritime infrastructure around the Strait of Hormuz, with officials describing them as shaping operations that preserve options for broader military action if required. Trump also welcomed Iran's release of a detained American citizen as a gesture of goodwill, signaling that diplomacy remains possible despite the escalating conflict. And at a summit in Pennsylvania, Trump added that the country is booming and Iran will be defeated very soon. Let's listen in.
The country is booming, and we'll have Iran defeated soon. They'll be defeated very soon. And then I guess it'll be even better. But, even during this, it's been amazing. I mean, to think, so I call it a military operation, but call it whatever you want. It's incredible. It's like it hasn't made a dent. A lot of people thought oil would go up to $350 a barrel, and today it's at $79. A couple of days ago, it was at $68. It went up a little bit because I had to take tough action because they did not obey what they're supposed to obey. I mean, they just didn't do it. So we took a little action, but when that settles down, I think you're going to have $55 oil, which is all great for what you're doing, maybe less than that.
Moving on then, in some positive signs for the U.S. economy, producer prices unexpectedly fell in June, marking the biggest monthly decline in over a year and coming in below market expectations. The wholesale good prices saw a sharp correction, led by lower energy product costs. The softer than expected inflation print has reinforced expectations that the U.S. Fed may have room to keep interest rates unchanged in the near term. And Fed Reserve Chair Kevin Warsh used his Senate testimony to strike a balanced tone on inflation and artificial intelligence. Warsh said that AI could lift prices in the near term by boosting demand, but argued stronger and higher productivity should make it structurally deflationary over time. He reiterated that controlling inflation remains the Fed's primary responsibility, described the labor market as broadly balanced, and stressed that interest rates, not the Fed's balance sheet, should remain the main monetary policy tool. Let's listen in.
the star by which we steer by. And if we get policy right, and we will, the inflation surge of the last 5 years will be a thing of the past. Just a month ago, I chaired my very first FOMC meeting. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly fluctuations are inevitable, especially in an unsettled world, underlying inflation over longer-term horizons is determined largely by monetary policy. As I've said before and will say today, inflation is a choice.
And Morgan Stanley has delivered a blockbuster second quarter, posting record revenue and profit as a global surge in the equity market activity boosted trading and investment banking. Earnings and revenue comfortably beat the street estimates, with equities trading jumping 69% to a record $6.3 billion. Strong IPO mergers and AI-driven market activity also lifted investment banking, while wealth management continues to deliver steady growth. And United Airlines has beaten second quarter earnings estimate by surging. Jet fuel prices are threatening profitability. The carrier says renewed tensions in the West Asia could add nearly $6 billion to its fuel bill this year, even as travel demand remains resilient. While United has raised the lower end of its full-year earnings guidance, it also warned that higher fuel costs could force further capacity cuts if oil prices remain elevated. And Anthropic, the company behind the Claude family of AI models, is moving closer to a public listing rather than beginning investor meetings ahead of a potential IPO later this year. Backed by Goldman Sachs, Morgan Stanley and JP Morgan, Anthropic could reach the public markets before the arrival of OpenAI. The company was last valued at $965 billion, making it one of the world's most valuable AI startups. And PayPal could be heading for one of the biggest fintech buyouts ever. Stripe and private equity firm Advent International have reportedly made a $53 billion takeover offer, valuing the payment giant at $60.50 per share. The bid represents a 28% premium to PayPal's previous close and sent the stock soaring. The post-IPO euphoria around the SpaceX appears to be fading. Shares of Elon Musk's rocket company briefly slipped below their $135 IPO price for the first time before ending the session slightly above it. The decline comes just a month after its record-breaking public debut and ahead of company's next Starship test flight. And South Korea has become one of the first major Asian economies to restart its rate hiking cycle. Bank of Korea has raised interest rate by 25 bips to 2.75%, its first increase in more than 3 years, as sticky inflation, rising property prices and a weaker won outweighed concerns over growth. Policymakers also pointed to an AI-led semiconductor export boom, saying stronger economic momentum has given the central bank room to refocus on price stability. And let's shift focus to FIFA. Argentina are through to the World Cup finals after a dramatic 2-1 comeback victory over England. Trailing with just minutes remaining, the defending champions struck twice late through Enzo and substitute Martins, with Lionel Messi providing assets for both the goals. The win keeps Argentina's title defense alive and sets up a blockbuster finale against Spain on Sunday. And the landmark India-UK FTA has officially come into effect. The Comprehensive Economic and Trade Agreement, or CETA, provides zero-duty market access for nearly 99% of India's exports to the UK, making it one of the most significant trade deals signed by India in recent years. The agreement is expected to provide a major boost to labour-intensive sectors, including garments, textiles, footwear, carpet, processed food and much more, which will now enter the UK market without any custom duties. ET now spoke to the Commerce Secretary Rajesh Agarwal about how this trade agreement would impact the Indian industries, which sectors will stand to benefit from it, and much more. Let's listen into this slice of that conversation.
I think for businesses, many areas which they were exporting to UK, the duties go down. 99% of the tariff lines in UK now do go down to zero for India. So that means all our textiles, all our leather, footwear, apparel, agriculture goods go down to zero duty, and that's a big win for our Indian industry. And Indian industry, which are already present in UK market, should be able to take good advantage of it. And new industry, new startups, new MSMEs should also be able to leverage it. For consumers also, this means good quality products, technology products, products which we are dependent on UK for import. Those products can come out cheaper, and that will be available in the market for them cheaper. Cars has been a good aspiration. I think many Indians on the who meet me about India UK SICA keep me asking when the cars will start coming in. Absolutely. Because the aspirational India look for a different quality, different types of cars, and that is also something that they will get in equal measure. So I think it is a win-win from both consumer perspective and also from a very business perspective, which opens up big doors and big opportunities for them.
Right. So very rightly said that it is definitely a balanced trade agreement, like you've said in many of your press conferences. Since you spoke about autos, let me ask you, when do the first set of cars arrive on India's shores? And second part to my question with respect to autos is the fact that you have brought in a tapered form of quota system, and EVs only start after year 5. What's been the rationale and thinking behind that?
One, auto sector is one which we have not opened up much in the past. This time it has been a calibrated opening up. It has been a quota-based opening up, wherein if you look at the opening up is more, the quotas are more in the high-end car, the costliest car, which are not the segments where we produce more. So those are the areas we have brought down duties and enabled cars from UK to come in. The EVs is a developing industry in India. It's expanding fast, but we thought it needed some time to settle down before being opened up to some foreign competition. So the quotas in EV trickle after 5 years, but all these quotas go on and taper down to the 14th to 15th year. And we are looking at a good duty out of quota, and we feel with this some element of competition on the fringes, our industry will also come of age, and it will be good for our consumers.
Moving on, then, Union Cabinet has greenlit key projects in its weekly meeting. Cabinet has approved the second edition of India Semiconductor Mission with an outlay of 1.27 lakh crore rupees. The new edition of the semiconductor program has provisions to incentivize even suppliers of raw materials in the chip manufacturing industry, including minerals and gases. Cabinet has also approved 62,500 crore rupees for the second edition of the mobile phone production linked incentive scheme. Listen in to what the Union IT Minister Ashwini Vaishnav said about it.
सेमिकॉन 2.0 1,27,500 करोड़ रुपए का सेमिकॉन 2.0 आज माननीय प्रधानमंत्री जी ने अप्रूव किया। हम सब जानते हैं कि सेमीकंडक्टर इंडस्ट्री एक फाउंडेशनल इंडस्ट्री है जो कि आज जितनी भी मैन्युफैक्चरिंग होती है, चाहे आपके हाथ में जो मोबाइल फोन है, जो कैमरा है, घर में फ्रिज, टीवी, एसी, स्कूटी, कार, ट्रेन, चाहे मिसाइल्स हो, कुछ भी हो, सब में सेमीकंडक्टर चिप्स लगती है। इसके लिए आज और इलेक्ट्रॉनिक्स अपने आप में बहुत ही एक बड़ा फैक्टर बन के उभरा है, तो इलेक्ट्रॉनिक्स की अब पूरी चेन, वैल्यू चेन अब कवर हो गई।
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll come and give you all the cues to watch out for before the start of these streets. Stay tuned. Welcome back. You're tuned into Market Cafe. Let's talk about SEBI adopting the stricter code of conduct for board members. The market regulator has tightened investment disclosure norms, restricting fresh investments in individual equities. My colleague Anurag is now joining us with the details of this story.
SEBI has unveiled the code of conduct for its full-time and part-time members. The code was adopted by the SEBI board at its June 19 meeting. The code ensures that the members' conduct doesn't compromise the ability of the board of SEBI to accomplish its mandate, and it enhances the public trust in the ability of the members to discharge responsibility in a fair and transparent manners. At the time of joining the board, the whole-time members are given options, and these options include to liquidate non-permitted investment, freeze non-permitted investment till the time of completion of the tenure with the board, and disclose a trading plan to the Office of Ethics and Compliance. The code of conduct also covers the family members and the relatives of the members of SEBI. The members will recuse from matters linked to the person falling within a conflicted relationship, and the member will disclose the conflicted relationships at the earliest possible opportunity, the Securities and Exchange Board of India said.
All right, let's move on then and get Meryl on board with all the stocks that will be in focus in today's trading session. Over to you, Meryl.
Right, these are some of the stocks that we're expecting to see in the spotlight on the back of their first quarter announcements. Starting first with Angel One. Now, on a quarter-on-quarter basis, the company has recorded a soft set of numbers. Revenue was down 2% for the company, while profit took a hit of almost 27.8%. On a quarter-on-quarter basis, EBITDA margin as well has come down from 41.01% earlier to now at 33.9% again compared to the last quarter. Jana Small Finance Bank, however, has posted a very strong set of numbers. Net interest income for the company has been seen up 34% on a year-on-year basis, while profit as well has gapped up almost 52% on a year-on-year basis. NPAs as well were seen improving for the company. Gross NPA came in at 2.39%, an improvement of 5 basis points on that front, while net NPA also recorded an improvement of about 1 basis point. MV Photovoltaic as well has reported a strong set of numbers. PAT for the company has more than doubled on a year-on-year basis, surging 102%, reaching to 380 crores, which was supported by the expanding of the company's operating margins. EBITDA was up 56.5% as well, and revenues for the company jumped up almost 50% on a year-on-year basis, reflecting this robust solar module execution that was seen in the company. MRPL as well has posted strong set of numbers. Top line for the company has beat estimates. However, EBITDA and PAT have recorded a slight bit of a miss. PAT for the company was surging quarter on quarter, and they actually reversed the losses from the first quarter of FY26, but they did beat street estimates. So it's going to be quite interesting to see how the stock performs in today's trade. Last but not the least, Himadri Specialty Chemicals, where profit has grown 26.5% to 230 crores, and revenue as well for the company has surged up 28%. So yes, these were some of the names that we're expecting to see in the spotlight in today's trade.
All right, so those are the counters that will be in focus in today's trading session. But let's also talk to Shesha, who's joining us with yet another list of stocks that will be in focus. Shesha, tell us what are the stocks that you have picked out for us?
Well, yes, a whole host of counters that will be in focus on the back of news piece other than earnings. And let's start with Adani Power then. First up, they've spoken and they've informed the exchanges that they have signed a 25-year supply agreement with Maharashtra State Electricity Distribution Company. And they've said that this is for long-term supply of 1600 megawatt of power. So it's a long-term agreement. Keep an eye out on Adani Power on the back of this. HDFC Bank, meanwhile, a procedural announcement that has come through where the bank has approved the appointment of Rajiv Kumar as the part-time chairperson of HDFC Bank for a period of 3 years, and KK Mistry will continue as the non-executive, non-independent director of the bank. So keep an eye out on HDFC Bank on the back of this management news. TVS Holding, meanwhile, a subsidiary of the company Home Credit India, has executed a share purchase agreement to acquire 100% stake in Vardhana Finance for about 967 crore rupees. So some acquisition coming their way. TVS Holdings in focus on the back of that. Meanwhile, Acme Solar will also be in focus because they've said that they've commissioned a 110 megawatt battery storage system in Jaisalmer, Rajasthan, and total commission capacity now stands at 285 megawatt after this particular commissioning. So some capacity expansion plans coming their way. Hero MotoCorp, some of this news piece came yesterday, but Ather Energy has been approved allotment of about 76 lakh convertible warrants to Hero MotoCorp, and this has been done at 1260 rupees per warrant. Powerica, meanwhile, a positive news piece on the back of an order win where they've secured a 100 megawatt wind power project. 3 other stocks will be in focus on the back of block deals. One is Mrs. Bector's, where Abacus Investment Managers has acquired 0.9% stake. One MobiKwik will also be in focus because foreign investor FLC Investo LLC has sold about 0.9% stake, and Jupiter Lifeline Hospitals will also be in focus, and this is because HDFC Mutual Fund has purchased about 1.42% stake in the company. So these 3 stocks will be in focus on the back of block deals that happened in yesterday's trading session.
All right, watch out for all these counters that will be in focus. But let's also talk about HDFC Life. that will be in focus as it has reiterated its FY27 growth ambitions despite a challenging environment. ICICI Lombard's first quarter was hit by one-off events with larger fire claims and higher motor third-party provisions weighing on the profitability. To get us the lowdown on the numbers, Mithali is now joining us with the management commentary as well as a brokerage take on both. Let's take a look.
Right, let's start with HDFC Life first. So, company has delivered better than expected Q1 FY27 results, both their APE as well as the VNB. It increased by 9% on a yearly basis, and also the key positive was the VNB margin at 25%, improving sequentially due to a better product mix led by protection, annuity as well as non-par savings. The profits for this quarter has risen by 11% year on year. Growth was basically driven by agency, direct as well as non-bank alliance channels, while the HDFC Bank channels, they remained soft for particularly this quarter. Now, management has guided for 15 to 17% APE growth and VNB margins to be around 25%, indicating continued focus on their profitability growth. Now, talking about ICICI Lombard, company has delivered a weak set of results for Q1 FY27 with their PAT down 46% on a yearly basis and the combined ratio worsening to 107.2%. However, this was largely due to two exceptional items. One was a 165 odd crore rupees of reserve following the Supreme Court's motor third party compensation ruling, and another was 63 crore rupees of losses from two large fire claims. Together, they actually impacted nearly 3.8 percentage points to the combined ratio. Excluding them, the combined ratio would have been around 102 odd percentage. Operationally, motor premiums grew around 14% and health grew 24%, but the fire premiums, they remained subdued because the business was avoided as being claimed underpriced. The bigger concern is that the industry pricing, it remains highly competitive, and with higher motor TP claims, they're likely to put pressure on the profitability going ahead as well. So for both the companies, the crux remains that HDFC Life, it reported a strong number with quality quarter with healthy growth as well as stable margins. But for ICICI Lombard, the earnings disappointed because of the one-off events, and the more important takeaway is that the industry environment, it remains challenging as of now and might put profitability pressure going ahead as well.
All right, Mithali, thank you so much for joining us. But with that, it's a wrap on this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.